In Unit 6, we're going to cover financing. And statistics in our industry have shown that if you do offer your customers some type of financing, then you're going to sell a much higher number of vehicles. So if you want to, you can tell every single customer to just bring in their own cash, but you're going to be turning away a lot of customers. And there are studies that have shown that about 85 to 90% of your customers will need to obtain a loan in order to purchase the vehicle from you. So, there are basically two different types of financing that you can offer your customers: on the spot financing and buy here, pay here. So, on the spot financing, it's a term used when you have a relationship with a third party lender, such as a bank or maybe an online dealership lending service. When your customer wants to purchase a vehicle, you can log on to that third party lender, input your customer information. A lot of times you just need to input their name, social security number, and birthday, and then click submit. And the third party lender will then process that application and hopefully approve that lending on the spot. And this is where the term on the spot lending originated. So if the third party lender approves your customer's loan, then the customer will make payments to the third party lender, and the third party lender will transfer that entire purchase price into your account. And normally that'll happen within 1 to 2 or maybe 3 business days. So they'll wire transfer the entire purchase price into your account, a couple of days later. Buy here, pay here dealerships operate a little bit differently. So if you choose to become a buy here, pay here dealership, you might, for example, purchase a vehicle at an auction, then sell it to your customer, with the customer making payments directly to your dealership, maybe every other week or every month, regardless of the type of financing you may offer. If you offer any type of financing, or even if you simply assist your customer in gaining a loan for a vehicle that you're selling, you're recognized as a loan broker, okay? And brokering loans, basically that you've become a financial institute, and you're going to need to follow several state and federal laws that regard financing. So first, we're going to cover Ohio financing laws that will affect financing, and then we'll discuss some federal laws after that. Ohio law requires all retail installment contracts to be in writing. So if you're using a third-party lender, be sure the paperwork that they are using is compliant with Ohio laws, obviously in addition to all federal laws. If you're operating a buy here, pay here dealership, be sure all the documents completed by your attorney for you to use on the transaction are compliant with Ohio and federal laws as well. The state law in Ohio requires that the customer is given copies of all finance documents and is normally going to be required to sign a document stating that they have received copies. So, once again, be sure to make 2 copies of every document. One goes to the customer and one goes into your dealer records. Ohio law also requires certain details to be included in all written installment contracts. And remember, an installment contract is any contract that is involved with a financing deal. So any installment contract would actually have to have the price listed, the down payment, the cost of any insurance if required. You have to have all finance charges listed, a balance due under the contract, all the details of the payments. And by the way, dealers are strictly prohibited from giving out a customer social security number or credit card account number and things like that. I mean, that's pretty much common sense, but you certainly need to be aware of that. Ohio state laws also prohibit any business from printing more than 5 credit card expiration dates on a customer's credit card receipt as well. So no matter what, normally when you're using a third-party lender, they're going to print this paperwork up to you for you automatically. But if you do become a buy here, pay here dealer, it's going to be imperative that you do have your attorney draw you up the correct written installment contract. So those are a couple of the state laws. Before I talk about federal finance laws, I want you to be aware that federal law does what we say supersedes state law. So although we're following all the state laws, that come out of Columbus, we're also following the stricter federal laws that come out of Washington. And there tends to be many more federal laws that involve financing than state law. And I'm going to cover some of these with you now, including the main 3 the main three laws from Washington called the Truth in Lending Act, the Equal Credit Opportunity Act, and the GrammL Privacy Act. So everyone, let's go ahead and get started with the Truth in Lending Act. The Truth in Lending Act requires you to disclose all credit terms in writing and must disclose the following information in writing to any customer that's obtaining a loan for a vehicle. So in writing, you're going to have to disclose the length of the time of the loan, the amount financed, all finance charges need to be in writing, a schedule of the payments. You have to identify the creditor, whether it's maybe you or a bank or a third-party lender. You have to have a complete itemization of the amount financed, an annual percentage rate, including any applicable variable rate disclosures, a total of all the payments, the payment schedule. You'll also have to include any prepayment or late payment penalty fees if applicable. Okay, so you must have the total sales cost, the demand feature, any required deposits and references to contract. Okay, so if you have ever purchased a vehicle with a loan, you've seen this great big long document that has, the total of all the payments and the interest rates and things like that. As I said earlier, if you're using a legitimate third-party lender, then they should print this information up for you automatically. Okay, so if you're shopping third-party lenders, always ask them if they're complying with the Truth in Lending Act. If you ever have a third-party lender that asks you, well, what's the Truth in Lending Act? Well, you certainly don't want to use that company. So you want to make sure that all this documentation is printed up when you hit the print demand option on any of your dealer financing software that you might be using or a third-party company. And I'm sure that, if you're using a competent Ohio attorney to draw up your paperwork, I have no doubt that they'll make sure that you have the Truth in Lending Act requirements in writing. Okay. Next, let's cover the Equal Credit Opportunity Act. Okay, the Equal Credit Opportunity Act. When you're helping your customers gain financing, you're also going to have to follow the federal Equal Credit Opportunity Act. Okay, and what this does, it just ensures that all consumers are given an equal chance to obtain credit. So you definitely need to be aware of this because, when we are sitting down with our customers, obviously we're going to be asking them some questions during the loan application process, but there are several questions that you are strictly prohibited from asking. Factors such as, income, expenses, debt, credit history are still taken into consideration, obviously, but anyone that is granting credit, such as an automobile dealer who arranges financing through third-party lenders or automobile dealers offering buy here, pay here financing, and also motor vehicle dealers that act as lien holders must follow the Equal Credit Opportunity Act. So, I want you to be aware during this loan application interview, you cannot discourage your customers from applying for credit because of their sex or their marital status, their age, their race, or their national origin, or if because they receive public assistance. So, if your customer receives public assistance, you certainly could not discourage that person from applying for a loan. Also, during a loan application interview, you can never ask your customers to reveal their sex or their race or their national origin or their religion. You can't ask a customer if they're widowed or divorced. So you can't ask a customer about marital status. And, also, you can never request a customer's spouse information unless the spouse is renewing that account with the customer. You can also never ask your customer if they have plans for raising children. So, let's just say, for example, you've got a young couple applying for a loan to buy a vehicle from a dealership, and you say, hey, are you two thinking about starting a family? Unfortunately, you just broke a federal law. So this federal law is very clear. You may never ask your customers for plans about raising children. Also, you can never ask your customer if they receive child support. I want to repeat that. You cannot ask your customer if they receive child support. This is a violation of federal law. You can ask if they have to pay child support, but you cannot ask if they receive child support. You can ask them, say, for example, if they receive other income, but you can't ask them if they receive child support. That is a violation of federal law. I certainly want you to be aware of that. You cannot consider whether or not your customer has a telephone listing in their name. And also, I want you to be aware of something. You can never consider a person's age on a legally binding loan application unless you assume that person is not 18 years of age. So remember, earlier in the course, we need to ensure that our customer is at least 18 years of age. So you can never consider a person's age when they're applying for a loan unless you suspect they're less than 18. And state law does allow you to require your customers to show some type of proof of age if you suspect that they're less than 18. So also, when you're evaluating a customer's income, you may never refuse to consider public assistance income exactly as you would employment incomes. And so what do I mean by that? Let's just say, for example, you're a buy here, pay here dealer, and you've got one customer that receives like $1,000 public assistance from the government every month. And you've got another customer that makes $1,000, working at some factory. Well, you have to determine those incomes exactly the same. So this law would never, ever allow you to differentiate between public assistance income and employment income. So when you're doing a loan application, remember, employment income and public assistance income must be considered the exact same. Okay, so also, like I said, you don't want to ask if they're ever starting about thinking of family. But if you ever deny a credit application, and let's just say, for example, that you're a buy here, pay here dealer, and you have denied somebody, a credit application or approval, then you must let them know in writing exactly why their application for credit was rejected. So you must give the customer notice that tells them the specific reasons for the rejection of the credit application within 60 days. So I want to repeat that. If you're a buy here, pay here dealer and you have refused a credit application to one of your customers, you will need to notify that customer in writing within 60 days. And acceptable reasons in writing for explaining why you denied the credit application would be something like telling the customer your income was too low, or maybe telling the customer you haven't been employed long enough. So unacceptable reasons would be something like, you didn't meet our minimum standards, or you didn't meet enough points on our personal dealership credit scoring system. Okay, you can't say something like that. Indefinite and vague reasons are illegal. So you must be very specific and let the customer say, for example, no, their credit application was declined because their income was too low, or possibly they have not been employed long enough. But I want you to be very, very aware that credit applicants that have been denied equal lending opportunities under the Equal Credit Opportunity Act may recover punitive damages from your dealership for up to $500,000 or 1% of your net worth, whichever is less. I want to repeat that very important statement. Credit applicants that have been denied equal lending opportunities under the Equal Credit Opportunity Act may recover punitive damages from your dealership for up to $500,000 or 1% of your net worth. Okay, so compliance. It is definitely the name of the game here, especially when we're talking about these federal lending laws that are coming out of Washington. So, if you are, let's say, for example, using a third-party lender, the third-party lender is going to have that software on your computer, and you're just going to be asking those specific questions that you see on your screen. It'll say, how much is the customer's annual income? What is the household total yearly income? Things like that. So just stay on the questions that you see on that third-party software screen, okay? You don't ever want to, reach around the side of the computer and ask that customer if they're married or something like that. That would definitely be a violation of the law, and you could face significant financial penalties. So make sure that you're complying with the Equal Credit Opportunity Act. The next law I want to talk to you regarding financing that comes out of Washington, which is obviously a federal law, is going to be the Bliley Privacy Act. The Bliley Privacy Act includes provisions to protect consumers' personal financial information that's held by financial institutions, such as a dealership that's offering any type of financing. So these regulations, they apply not only to banks, but any financial company, such as a motor vehicle dealer. So Among these services are going to be covered are going to be lending or brokering loans or servicing any type of consumer loan. So you need to be aware of this. There are basically 3 parts to the Gramm-Leach-Bliley Privacy Act requirements: the financial privacy rule, the safeguards rule, and the pretexting provisions. Okay. Now, I want you to be aware the financial privacy rule governs the collection and disclosure of customers' personal financial information by the dealer. The financial privacy rule requires dealers to give their customers privacy notices that explain what that dealer is going to do with the information that is shared and collected. And in turn, customers have the right to limit some of that information. It also contains the safeguards rule. The safeguards rule requires financial institutions, such as a dealer, to have a security plan to protect the confidentiality and the integrity of the personal consumer's information. You must be able to protect the consumer information, whether it's stored, on hard paper or maybe, on a computer. Hard paper files must be stored in some type of lockable paper storage system, and any computer that's used by the dealer during, say, for example, a loan application process would need to have some type of good antivirus protection, like, McAfee or Norton. So with this law, no matter what, we want to protect not only the hard paper copies of all of the customers' financial documents, but we need to protect their digital footprint as well. The pretexting provision of the Gramm-Leach-Bliley Privacy Act prohibits the use of false pretenses and fraudulent statements in actually gaining access to a customer's financial information. The privacy notice of this must also be clear and an accurate statement of what your dealership is going to do with the customer's information. So, a privacy statement would need to include any information you collect, who it's going to be distributed to, and also, how it is going to be stored. So do keep that in mind, that you do have to have something in writing that shows how you will disseminate information that's collected. So everyone, in a nutshell, this is pretty much a common sense law. The Gramm-Leach-Bliley Privacy Act requires you to protect your customers' financial privacy. So as an example, let's just say, for example, you've printed up a customer's loan application and you left a loan application sitting on your desk. And then the very next customer comes in and they see that loan application from the previous customer. You have broken a federal law. So you want to make sure and secure all customers' financial information. If you print up a loan application for your customer, let's get that thing into a locked file cabinet. You don't want it floating around to where, a customer or especially another a salesperson or something like that could see that. But also make sure if you're using some computer during an online loan application, that computer has to have some type of active antivirus protection, like I said earlier, McAfee or Norton, because this law also wants to hopefully ensure that a hacker can't come across the internet and get onto your computer and steal all of your customers' financial information. So we're going to protect the hard paper copy of all of our financials for our customers, and we're going to protect their digital footprint as well. So be sure that you're covering these guidelines. Now, I want to talk a little bit more about Ohio dealer repossessions. Before we move on, though, if I could make one recommendation for you during this training course, I would never recommend getting your dealer's license for the very first time and then starting a big buy here, pay here dealership the next week. I would recommend getting your dealer's license. You might possibly want to hook up with a third-party financer to finance the vehicles you've sold. Get a little bit of experience under your belt, and once you have done that, then you might want to explore opening a buy here, pay here dealership. If you are financing your own vehicles, it is imperative that you get some further legal advice after this course, because running a buy here, pay here dealership involves a whole other level of compliance. If you're financing the vehicles that are being sold on your lot, you must clarify in writing when the customer has defaulted on their payments to you. Your written contract may state the customer has defaulted the loan if their payment is 15 days past due or 30 days past due or 60 days past due. These are just some examples. So you want to be sure that you consult with an attorney when writing your default guidelines on that installment contract. Some dealers give customers a grace period to catch up on late payments to prevent repossessions, and some don't. But I don't want to discourage you from running a buy here, pay here dealership in the future, because running a buy here, pay here dealership can be extremely profitable. If you have 40 or 50 customers all making their payments on time every single month, you can see a very large cash flow into your dealership. But that being said, it is very rare when all of your customers are making their payments on time. So there may be times when you're going to have to repossess a vehicle. And if you are repossessing a vehicle, the state has very strict guidelines to follow when you're repossessing a vehicle. During a repossession, a dealer is not allowed to do anything that is likely to lead to violence. The dealer may also not provoke a customer during a repossession or incite the customer to break the peace, okay? If a dealer breaks the peace, the customer can ask the dealer to leave and stop trying to repossess the vehicle. If the dealer refuses, then the customer can actually contact law enforcement and have that law enforcement officer come out and keep the peace, okay? So you must never use or threaten force during a repossession. You are generally not required to contact the customer before the repossession unless it is specifically required in your installment contract. You might consider hiring a professional recovery company if you do ever do a vehicle repossession, but it is crucial that you consult with an Ohio motor vehicle attorney before you start any buy here, pay here dealership. So, I also want you to be aware, if you do consider becoming a buy here, pay here dealership, you are basically allowing a customer to get a loan for a vehicle when a bank has possibly closed the door on that customer, so you are providing that customer an opportunity to own a vehicle, and you're probably going to help them keep their job, and you're helping them support their family, and you're helping them have a much higher quality of life by offering financing to them when the bank has closed the door on them. So definitely, this is definitely something you might consider in the future. And it can be a great advantage to any customer. It can be very profitable. But like I said, I would never recommend getting your dealer's license for the first time and starting a buy here, pay here dealership next week. I would recommend get your dealer's license, hook up with a third-party financer, get some experience, and buy here, pay here is something you might want to consider later on. But like I said, it is crucial that you consult with an Ohio motor vehicle attorney that specializes in motor vehicles before starting a buy here, pay here dealership, okay? Hey, let's do our Unit 6 review. In Unit 6, we have learned that all installment contracts must be in writing. Ohio dealers must comply with all Ohio financing laws. Ohio dealers must also comply with all federal financing laws that come out of Washington. Remember, copies of all finance documents must be given to the customer. So you're always going to make 2 copies of everything. One goes to the dealer records, one goes to the customers. Dealers obviously may never give out Social Security information. The Truth in Lending Act requires all finance terms to be in writing when there is financing involved. The Equal Credit Opportunity Act ensures all consumers are given an equal chance to obtain credit. Credit applicants that have been denied equal lending opportunities under the Equal Credit Opportunity Act can be rewarded $500,000 from your dealership. Remember, we talked about that. The GrammL Privacy Act protects a person's financial privacy, and all dealers must follow strict Ohio repossession guidelines. Remember, we would never break the peace during a repossession. So if you need to take a look at this unit again, perhaps you want to fast forward to find specific information, you can visit ohiodealer.com. Remember, ohiodealer.com, and click on that course videos link at the very top, and you'll be able to review all the videos in this training course at your convenience.